Ladies and gentlemen, the World FinTech Festival in Budapest continues now with our next session on green and sustainable finance. First of all, I'd like to call upon the senior partner of the Vancouver office of McKinsey, Mr. Miklos Dietz, to deliver his keynote speech titled Doing Good: How to Increase the Positive Environmental and Social Impact of the Financial Sector. As the title suggests, the financial sector has an elemental role in determining what our future will actually look like. Miklos is the senior partner of McKinsey's Vancouver office, as I mentioned, and since joining the firm in 2001, he has specialized in strategy, business building, and innovation topics. And he has led over 400 projects in more than 40 countries. He is also the leader of the Cross-Industrial Global Ecosystems Group and the Global Banking Strategy and Innovation Group. Miklos joins us live from Vancouver, where I believe it's just after 4 o'clock in the morning. So, Miklos, we're especially grateful that you've taken this time to be with us. Thank you, and please, the floor is yours.
Well, thank you. Thank you very much. Indeed, it's fresh early morning here, and I'm full of energy, so really happy to share my thoughts on this topic, especially because from a strategic perspective, we believe that the environmental and social impact of banking is a very strategic one. It goes actually beyond just ESG, and this is why we are trying to look at the broader implications, what we call doing good here. Let me go to the first page, please, and to kind of summarize a little bit what I wanted to briefly touch in the next few minutes. So if we go to the next page, I wanted to speak about 4 topics. I don't know if the page is moving. I wanted to speak about 4 topics. Number 1, what is actually the historical implications and role of banking, and how this has evolved over history. It's actually an unusually important topic to look at the historical implications. Then I wanted to touch a little bit, why do we believe that this is not just a general corporate social responsibility topic, but why it can actually create also shareholder value. Why for fintechs and for banks, this is one of those topics when one can actually have the rare win-wins in business world. And I was hoping, could we move the next page, please? Then I was hoping to touch a little bit the topic on how what is the end game here? How do we see a potential bank of the future being truly integrated in terms of social and environmental impact by being also quite successful? And then finally, I wanted to touch a couple of practical implications. I'm wondering if we can move to the next page here. Sorry, I don't see if the page is moving. So let's go back a little bit, please. Let's go back a little bit, and so let me start with the history here. The history is, if you look at back to the 15th, 16th, 17th century, the early history of banking in Europe and also beyond, it had a tremendous positive implication. I was actually planning to go to the previous page. It had tremendous positive implications. Banking, after all, solved the big problem of how to shift money from those who have it to those who need it, how to finance projects, and how to open up the economy from the less than 1% of truly rich to the rest of the population. It created social mobility, which then created the whole revolution of developing the middle class, which in turn created a totally new political systems. It created the rule-based global economy. Banking has been the lighthouse of economic development, of growth, and of social stability for hundreds of years, countries who had growing banking sectors became global leaders, not just economically, but truly global leaders in terms of enabling larger and larger parts of the population to benefit from economic growth, and also leading to accelerated growth from at the very beginning, from the Netherlands in Europe to then the Great Britain, and then the rest of the world. That type of amazing positive growth, though, and that type of huge positive impact is not something we have seen and recognized in the second half of the 21st century. In fact, if we look back, if we look back more to the financial crisis, what we see is banks rather being the problem almost, and having a reputation of moving risks, making a lot of money, being bailed out by the global economy and by other sectors, while causing potentially negative impact. Now, the global financial crisis was almost the pinnacle of bad banks, and you may recognize many of the headlines from 2008, including how bailed out banks CEOs were ignoring the negative impact they are causing. This crisis is very different, though. First and foremost, it was not started by banks, but also very importantly, in 2020, in the global COVID crisis, banking has shown the positive impact it can have on the economy. It has shown how it can help protecting people and businesses from the negative effect. And banks were able to successfully collaborate with many governments who were quick in intervention and helped actually not just shield, but also hopefully will help to the economy to recover in the coming year. So that's a very different crisis. And that's also a timely reminder of how banking can really make a difference. In fact, if we could go to the next page, it's important to recognize that banking has a disproportionate role in terms of global social and environmental impact. Not just because banking is big. I mean, banking is around 5% of the global total revenue pool. It's around it's a $7.5 trillion business. But that's not its primary reason why it has such a disproportionate role in driving sustainable and socially impactful, stable economy. But if we go to the other side of the chart, so if we can click one more, it is the fact that the banking system also drives around another close to $300 trillion of capital, which is going through. It may be only 5% of the economy, but it actually intermediates another 90% of capital globally, which means that if the banking system can install meaningful environmental and social rules, it will basically affect the rest of the economy. So with great power comes great responsibility. And banking here should be able to effectively drive a transformation to a better economy in the future. Now, I would argue banks should follow that. And if you can go to the next page, please. Banks should do that. Not just because they are good, but also because it is actually a profitable thing to do. There is a win-win scenario here. And if you could go to the next page, I'm happy to speak a little bit more about that. There is a meaningful scenario for fintechs and for banks and for financial institutions in general to do good for the world and also benefit from it. Banks can enable its customers, even gently nudge and even force its customers to create positive social and environmental impact. It can actually set rules and drive economic growth as it has been doing hundreds of years ago at its beginnings. Banking can act as a positive agent for social mobility. After all, the very concept of financial intermediation creates mobility moving money from older generations to youngers in the form of, let's say, mortgage sector or capital investments into projects. Banks can be very helpful in helping, especially the segments who need the most help. It's the classical thing that people who are typically the most vulnerable, segments who have been most hit by crisis, economic segments, they are the ones who need money most. And the well-run banking system can actually create value from them. It can also drive environmental impact of and transformation of other industries. If financial markets and capital are setting rules for environmental sustainability, guess what? Companies do follow. And banks can also really help supporting local communities. They need to be very integrated into them, and they can truly make a difference. But at the same time, this is also good for financial institutions, fintechs and banks, because it enables, first and foremost, doing good and differentiate them, which is very important. We are entering an extremely competitive decade in terms of banking with razor-thin margins, very low interest rates, and extremely strong competition from big techs. We are looking at times when banks are facing disintermediation and commoditization, and for them, differentiation will become extremely important. And what is more differentiating and have true positive social and environmental impact? Interestingly, though, getting more meaningful social connectivity and therefore creating stronger ties with customers who care about this can also reduce risk cost, decrease churn, enable lower acquisition costs for customers, and overall create shareholder values. So we believe that there is actually a rare win-win in global economy of positive impact on both the economy and shareholders of banks and their customers. It's like truly a triple win. So if you go to the next page, the next page, please. We have been doing some surveys and research recently, and we have been looking at not just asking people, because that's always overestimates the impact, but looking from revealed choices and different ways of how important social and environmental impact of banking for its customers. And what we have found is already now around 10 to 15% of retail revenue pools are influenced by purpose, i.e. there is already around $300 billion of revenue pool, which is coming from serving clients who are willing to choose banks based partially on their environmental and social impact, who are willing to sacrifice some margins or some income or some features if they feel that they are serving the right institutions. That's already a $300 billion opportunity. But if we go to the next page, we are arguing that because of demographics, this is actually likely to grow. It's very heavily driven by basically Gen Y and millennial behavior, but it's also start to spread to Gen X, which is actually a much bigger economic revenue pool. If we are just looking at the trend of this number, we could argue that is likely to go much faster than global overall revenue pools, and we could see 300 billion to double or triple in the next 5 years. And we have also seen banks waking up to this, whether we are looking at social bonds, social impact credit cards, whether we are looking at solutions and products who are measuring environmental and social impact of financial institutions, impact investing, obviously, which is an enormous topic. We have seen how that one is spreading. So if we go to the next page, let's first look at let's also specifically look at the environmental part of it. This is one of the most visible examples of how finance can drastically change. In a world when we got used to like 5% economic growth, sustainable investment assets are growing by 15 and now seems to be accelerating and growing even faster, close to 19% per annum, driving essentially already more than a third of all global financial assets. This is $61 trillion is forecasted to be in this category by 2022, which means that essentially financial institutions, again, who get models right, whether they are green deposits, whether they are solutions, they can achieve disproportionate growth. But that $61 trillion is just sustainable investment asset. But there are far more opportunities on the horizon than just having those funds being environmentally conscious. Green deposits, for example, is an idea when investors' deposits can actually be ring-fenced and ensure that they are provided to environmentally friendly projects. Digital impact accounts can track and measure the positive or negative carbon effect of people. Carbon neutral incentives can drive businesses accordingly. There is far more on the horizon than just green investment, and it can and it should drive innovation at a very rapid speed simply because of the economic opportunity here. If you go to the next page, I would argue that in this front, of course, as in almost every front of banking, fintechs are at the very forefront of transformation. I've shown some banking examples in the previous pages, but there is an almost impossible to fully track how many new ideas are coming up all over the world on these topics, from ethical investment and enabling ethical investments to creating responsible earned wage, to enable employee involvement, to create new type of green energy marketplace and carbon marketplaces. Financial institutions, fund managers, specialized fintechs, they are coming up and driving innovation at the very forefront of the banking everywhere, and they are getting disproportionate positive impact out of it. So where does this all lead? If we could go to the next page. We believe that the end game is that many financial institutions of size, from large incumbent banks to very small specialists, will be able to create truly differentiated relationship with their customers, from driving their behavior every day, from helping customers to invest. Those customers who care about this, obviously, people have a choice and will have a choice, but customers who care will be able to use their financial institutions not just for investing into environmentally and socially impactful roles, but most likely the sector will work out tracking systems and scoring systems, which will enable people to choose the right companies they are working with to track their environmental and social impact. They will likely to be able to reward it for the positive impact they are generating. It can create and enable also small businesses. The financial sector can enable them to be environmentally and socially conscious, connect them with the customers. So it can actually enable banking to go beyond banking and become an orchestrator of the broader environmental and social ecosystem, which would be a true game changer for the sector. So to close this all, if we could go to the next page. What does this mean for financial institutions? Well, we believe there are some do's and there are some don'ts. First and foremost, this is a major topic. Do not treat this only as corporate social responsibility. Corporate social responsibility is important, but this is a broader topic. It needs to be embedded in strategy. It needs to embed it from the very purpose of the organization to strategy, to operations, to everything. Collections, by the way, very important topic which needs to be connected. Don't wait for regulators to set up the rules. The banking system can and should be a driver, set up its own goal. From triple balance sheets to ethical codex, it should act as a leader rather than a follower. Do not be over-focused on philanthropy. Enable customers to make these choices. Banks should not be nice by themselves. They should enable their customers to be nice and do the good things. And it has to happen daily, not yearly once. Every touch point with the customer needs to enable positive choices and for the environment and for social impact. And don't just focus on sales. Look at every element of the banking system to be able to create and maintain positive impact. Doing this right can be one of the biggest differentiators in an extremely competitive and challenging next decade we are looking at. And this closes a little bit my intro. Hopefully it was useful.
We thank you very much for that very detailed and highly informative speech.